What's up, guys? Good morning, good morning. I guess it's the afternoon now, and hope everyone is doing well today. Sorry, I'm putting myself here, but let me get the volume working correctly, guys. Let me get a sound check in here. What's the sound like? Music's too loud. Alright, that should be noticeably better. Let me know if that works. I turned the music down pretty good, and so that should be fine. Let me know if that works, team. Hope y'all are doing well today. It is a beautiful Sunday. Y'all ready to get back trading tomorrow? I hope so. We're going to be going over some long strategies today. We're going to keep it easy today. Let me test the stream, see what that's like here. So I'll be right back. I'm going to mute myself. I'm going to listen to the volume. All right, guys. So yeah, the sound is right. The sound's looking right. I think that there's no delay on this stream, and so it's a little bit better, I think, actually. But yeah, there's no delay. I'll be right back, guys, and then we're gonna get started. I just wanted to get the sound rolling and everything. But yeah, today we're just gonna be going over some long strategies.
Yo, how we doing, family? Welcome to the stream.
What's up, man? All right, guys. I'll be right back. Hold it down, Mitch. I'm gonna go grab something. I'll be right back.
What's going on, team? How we doing? Like always, guys, if you guys can support the stream, hit the like. That'll definitely get us to more traders. Some more traders can go ahead and watch this class. Welcome, Alan. If you're new to the family, definitely welcome, guys. Say hello in the chat. Always like to see new faces, guys. What's up, Joe? How we doing? What's up, Leo, Bando? Of course, we got the Tiny Toons, Kevin. What's going on, guys? How we doing? How's everybody's trading weekend going? I hope everybody's studying up, getting ready for Monday.
All right.
I know I'm excited.
Yes, sir.
What's going on, man? How we doing?
Team? What's up, team?
What's up?
Oh, some scary movie, huh? What's up, guys? What's up, Kevin, Joe, Alan, Hossein, Kevin, Bondo, Leo, Tiny. I think that's it. What's up, team? We got 46 beautiful people in here. Hit that like button if you haven't already. We do this live every single day. We're going to be live tomorrow. And today we're going to be going over the strategies that we're going to maybe use tomorrow. And so, like I said, guys, everything is live, completely live right now. Ethernet cord is plugged in, and we are ready to roll here, guys. So,
hey, what's going on, James, Simple, BK, Wes? What's up, guys? It's good to see everybody in the chat saying hello. It's always good when we're being a little interactive, talking to each other. That's really what these weekend streams are about. These are the ones that the guys can ask all the questions you guys want. Anything from trading to even if you want to just look at some charts after we're done with the class, just let us know. We'll check something out for you.
Yeah, for sure. I really like doing these weekend streams, and let us know if you like these. Like usually we put out videos, but the streams have been doing a little bit better than the videos lately, and so I think we might keep doing these streams. Maybe one per weekend seems like a good kind of mesh well. I'm enjoying them for sure. I'm liking doing them for sure. And so let us know if you prefer these videos, if you like these videos, and we'll try to keep bringing them to you. But with that said, we're going to go ahead and go over some nice long strategies, and then Mitch has some different analyzations that he wants to go over as well, team. And so let's do this. We'll go ahead and get started. Prefer the streams.
Let's go ahead and get started. Like always, guys, hit the like. Let's get to some more traders.
Man, it's about time I need another haircut. I'm looking at myself in this mirror, man. About to have to get my wife.
You see that beard? You see that beard?
Yeah, I saw yours, man. Yours is looking healthy, bro. Looking healthy, man. You know, I had to trim mine a little bit this weekend. It's getting too bushy, but I'm like Samson, man. I can't shave it all the way. My trading will all of a sudden start to go bad. You know, I'm not superstitious at all. All right, guys. All right, so the first thing we're gonna go over is some profitable long strategies, and then just like last weekend, we're gonna do some on-demand examples. They're always fun to do, and you know I like to have the kind of laid-back vibe here for these streams, and they're really fun. We're gonna be going over some strategies that probably everybody knows today, but we're gonna be going over some kind of subtle nuances of these strategies that help them to be very profitable overall, at least for me. You know, obviously, I'm not an expert or a guru or anything like that, and I'm just teaching you guys what works for me, and obviously, it might not work for you. And so, of course, you know, we get haters that say, oh, y'all aren't experts. You know, it doesn't matter. Like, in the end, I was profitable every day last week. If you look at my P&L, I actually still have my TEFS platform up. This was my P&L last week. And you can see this is my TEFS platform. This was my P&L. And so, you know, $555 day on TEFS with NVIDIA, nailed NVIDIA with a little bit smaller size, but was a really profitable day on Friday as well. And it's just, I've been scaling up in size and slowly edging towards that 5K in profit level. That is my ultimate goal here. And I'm getting pretty close. I've got about $1,000, maybe $1,500 to go until I hit 5K in profits in this account, which is a really fun goal and a really, you know, something I'm very proud of overall is how much my trading has improved. And so with that, let's go over some strategies, team. Let me see. Let me catch the chat. What's up, Joe? What's up, Bob? More hair, more profits.
Man, definitely been killing it lately, you know. You know, one of the great things is always being able to adjust. I think you did a great time adjusting to the market environment with the volatility, and that's what's led to the profits. You know, like always, create a system, create a process, and then if you continue following that process, you should get through what I always call the waves of trading. And I think you've been doing really well in the waves. You know, sometimes there is some down days, but you know, if you can ride the up wave like you've been doing, getting those massive kind of win days, those definitely push your account, and then you got to control once you see a little bit of pullback, and that's really what matters. And
it's inevitable. It happens. Pullbacks are gonna happen, but that's right, man. I appreciate it. You just gotta ride the good times and then eliminate risk in the bad. That's all it's about. All right, team. So let's go over some. So the first one I'm gonna go over, and I know you guys have seen this strategy before. It's one of my favorite strategies. It's just the conventional VWAP bounce, and we're gonna go over 2 different examples of this strategy, but it's a very profitable strategy, and I've kind of documented it here. With MU here. And the first thing I really want you to understand about this strategy is that you want to look for a stock to maintain a trend, right? A stock maintaining a trend is key because that's ultimately what helps you profit with the VWAP bounce, right? You need stocks that maintain trends, and I'm going to go over some keys after this. I realized with the last slide that it would be preferable to me actually go over the chart with the strategy before I go over the keys, because that makes it a little bit easier to understand. But there's a few things I specifically look for with VWAP bounces. The first one is I'm looking for an upward trend with a cross over the VWAP, and you can see this cross here. Let me get my drawer out here. You can see this cross here. You know, it crosses over the VWAP. That is what I look for because that signifies an upward trend. You know, the VWAP is an intraday trend indicator, and so it just tells me the short-term trend on that particular day. And so when we get a cross over the VWAP like this, what is that telling us? That is telling us the stock has thus crossed over and starts to maintain an upward or bullish trend, which would be more favorable for long positions, if that makes sense. And so that's something that you'll see as a common theme in the strategies that I'm going over, is you'll see I look for stocks to cross over that level, and again, that signifies an upward trend, a trend change, and gives me a nice favorable scenario to trade an upward long pattern, if that makes sense. So Hope that makes sense to everybody. The second thing I want to go over here is I want to go over what a very common risk for me in these trades are. A very common risk is the opening range high for VWAP bounces. And if you see me trade VWAP fades, a lot of the time I'm using that opening range low as my risk. And so I kind of pivot back and forth. If it's long, I use the opening range high as my risk, and it lines up really, really well. It's a very respected level on these bounces. And then if I'm going short, you'll see me use the opening range low as my risk. And again, that's a very respected level on shorts. And so in this case, that area is right here. You see this opening range high. A lot of the time I'm using a 1 minute candle, and I'm looking for the high of that first 1 or 2 candles. It's even more preferable, guys, if they all kind of consolidate and converge right around the same level. Like if those first 2 or 3 candles can kind of line up to right around the same level. It doesn't have to be perfect, but if that happens, it just gives you a really respected level that has a lot of sway over a stock's movement. And so again, you can kind of see all that convergence right here. And really that is how people trade opening range breakouts, is they look for that same type of convergence to trade off of the breakout of that, right? If that makes sense. And so again, here's a good level and a good example of that here for that. And, you know, again, with a VWAP bounce, we're essentially looking for an upward trend. We're looking for a move up, and then we're looking for a pullback to the VWAP. When we get the pullback to the VWAP, that's ultimately where you want to enter. And you can see here, like I drew this out here, this is really your entry level. This is when you see the stock up here, you're going to start planning for the entry down here at the VWAP, and you're ultimately anticipating for that stock to maintain that upward trend, and that's what you're ultimately going to profit off of, if that makes sense as well. And so again, when you get in there, if you line this up, you can actually see how closely this lines up to this opening range high and how tight your risk will be in that instance, right? So if we draw this over, you can see how tight your risk is. That gives you a really good risk-reward ratio as well. You can get in around the VWAP. You can essentially risk off of that opening range high, and you can let it test some, but it's a really easy risk level. And then if you give yourself a little bit larger reward target, you've got a really good organic risk and reward ratio that's really favorable for your setups, if that makes sense. And so again, with a VWAP bounce, all you're doing is you're looking for an upward move. After the cross above the VWAP, you're looking for an upward move like this, a pull back to the VWAP, which is where you're going to enter right here, and then you're just going to look for the VWAP to act as a support level. You're looking for that stock to maintain that upward trend and maintain above the VWAP, and then you're just trying to ride it for a nice little breakout. And an organic way to take profits is around the previous high of the day. And I'm sure if you've been trading long enough, you can kind of see these moves happen enough. You can kind of see how often these moves happen where a stock will just do this, right? A stock will just pivot in a trend in between the VWAP and the previous high of the day, right? So you'll see something like this. And like I said, if you've been trading long enough, you know exactly what I'm talking about. You have like this range here, and you'll see the stock just kind of pivot up and down like this. And you can just essentially buy it every time it pulls back to the VWAP in anticipation of that stock maintaining a trend. And so in this instance, again, you can see how tight your risk is and how big your reward target is versus everything relative to your risk. And it just gives you a really good ratio. Like for instance, it looks like you're entering at around the whole dollar of 47 here. Your risk is right around 46.85. So your risk is about 15 cents. And your reward target is from 47 all the way up to at least 47.50, right? So that gives you about a 2.5 to 1, a little bit better than 2.5 to 1 reward to risk ratio, and it's a really good organic ratio to find, and these setups happen over and over and over again. And so before I move over to the keys to this type of strategy, I want to make sure everybody understands the strategy I'm talking about. Does everybody understand the strategy at this point? Do you include pre-market in your VWAP? No. Well, yeah, I guess so. I'm not sure. I have to go look at my VWAP settings. Okay, cool. Yeah, I just want to make sure you guys understand the strategy. I'm going to go over the keys to it as well. Teach me how to make $1 million in a month. I could teach you how to make $7 billion in 3 hours. You know, just trading my one secret super duper penny stock trading strategy. You know, $5 mil is all I'm charging for my courses, but it's obviously worth it. I'm going to get my orange Lamborghini after this. And my prop money, and then I'm just gonna create like a big stack of prop money and then sell a course. Anyways, but yeah, I hope you guys understand that. Now I'm gonna go. Now we can look at the keys to this strategy, right? And again, we're just free resource here. This is just how I trade the VWAP bounce. You can come up with your own variations of it. Obviously, I'm not guaranteeing this is going to work for you because it might not. And obviously, I'm not an expert or a guru. I'm just teaching you guys what works for me and kind of the system I have with these VWAP strategies that we've been implementing for years. And that has been long-term profitable for the most part. So anyways, we can go over and we can check out. I'm going to get out of this. There we go. Well, you look at the keys to it. And again, in my opinion, the keys to this strategy are the stock has to have a few things, right? In order for this strategy to really work well, at least how I've treated it long term, there's a few things that have to be present in your market environment with it. One of them is the stock has to have enough volume and volatility to stay in that short-term upward trend. The stock has to have enough volume and volatility to stay there. If the stock does not have as much liquidity or volume, a lot of the time it's not going to respect the VWAP as much. And one thing I hear people say all the time is I hear people say, oh, the VWAP doesn't work. A stock will just cross over and under the VWAP, and stocks don't respect the VWAP. Right, but people are looking at it the wrong way. They don't need to say stocks overall don't respect the VWAP. They have to understand that some stocks don't, and it's usually lower liquidity, lower volume stocks, right? Lower liquidity, lower volume stocks are more choppy, and so obviously they're going to maintain a neutral trend, which is when you see a stock crossing over and under the VWAP, it's actually maintaining a neutral trend. And so with that said, if you look at cheap stocks or stocks that have no liquidity or volume, what's going to happen? They're going to just stay sideways. They're going to chop up and down the VWAP. And so again, with that said, when you're trying to trade a VWAP fade or any type of VWAP strategy that takes advantage of trend confirmation, you want to look for stocks that maintain nice trends, have enough volume and liquidity to maintain those trends. And that should make sense if you understand it. The other thing is that with this strategy, it's accurate. When I've backtested this strategy a number of different times, I think the last time it had a 76% accuracy rate. So it had a good accuracy rate. But with that said, you still want to maintain at least a 2-to-1 reward to risk ratio or better. And that's just giving yourself the most edge that you can when trading, right? You want to try to maintain these ratios because, the accuracy is good, yes. But there's never anything wrong with trying to get as much edge as possible out of a strategy. And there are times where the strategy is not as accurate as it could be or as it is in other times, right? And so with that, try to always maintain at least a 2-to-1 reward to risk ratio when you trade it. And if you do that, you'll have a lot better results, in my opinion. The next thing here is that you want to be very strict with your risk levels. When it breaks, it can break big. It can really squeeze down because other people are using those risk levels as an entry for their short positions. If you guys remember my scalping videos that I've gone over lately, if you guys remember these videos, one of the strategies I talk about is when a stock forms a low below the VWAP and then it breaks down under that low, right? It forms a low beneath the VWAP and then it breaks down below that low and it gets a nice squeeze down that I can scalp and short into, right? That's kind of your stop out level for a VWAP bounce, and that's actually how I came up with that scalping strategy. Is because it's when I get faked out or it's when I get stopped out of VWAP bounces, right? So they both play off of each other. And so again, especially if you use that opening range low as your risk, when a stock breaks that, just respect it and get out like you need to. If you try to get stubborn, that's where you find yourself in trouble with these type of strategies. At least that's my suggestion to you all. Obviously, y'all are big boys and girls. Y'all can make y'all's own decisions with, regarding that. Again, another thing here is that it's not going to work on all stocks. If it's low volume, choppy, it's not going to work. You need stocks that respect short-term trends with the VWAP, and that's not every stock. Every stock, it's not going to work. And so if you try to trade this strategy on the wrong stock, you're just going to get faked out. You're just going to get squeezed, stopped out a ton. And so research the stocks that it works the best on and attack those. Like I said, I tend to attack AMD, MU, CGC, cannabis, and microchip stocks. But it works on other stocks as well. But find your niche with those stocks and figure out what works for you regarding this strategy. And go ahead.
Yeah, all right. Just want to jump in here a little bit, answer some questions from the chat. We had someone ask about VWAP pre-market. So what I necessarily said is that we wouldn't trust it as much. Pre-market has a lot of low volume and illiquidity. So these stocks have high volatility. You might see them jump $1 or $2 up. And so since VWAP really calculates volume, we try to use VWAP more intraday once the market opens. This is going to go ahead and give you a better pricing on where the bulls and bears are versus a pre-market look. Pre-market look you could see the VWAP go up and down, and the reason why is the volume is really low.
Right, for sure. Yeah, and so volume's key here. You gotta find. Usually, what I tend to do is I try to find higher volume, mid and high cap stocks that are consistently volatile. And that's why people ask me all the time, why do you trade AMD and MU so much? The reason I trade them so much is because they're consistently volatile. The float's not monstrously huge to where it doesn't have any range, and it moves enough for me to profit from, and it respects short-term trends a lot of the time. Not every day, obviously, but a solid amount of time I'm able to trade it, and it works really well. The last key here.
Question here.
Oh, go ahead.
Just want to get through some questions.
Sure.
There's a bunch of them. So, John, what is considered high or low volume?
That's going to vary depending on the stock. Stocks have different floats, different liquidity overall, and so it's going to vary depending on the float of the stock.
Yep. 100%. What I would use is relative volume, relative to the stock itself. And that's how you can tell if a stock has high or low volume. You can't really tell compared to, let's say, if I compared AMD to the S&P, those are completely two different things, two different assets. One's an ETF, one's a regular stock. So compare it to itself and then look at the daily volume, see how much it's increased. Are we trading 2 times the daily average, 3 times the daily average? And that's what relative volume means.
Yeah, for sure. And
another one, another question. Can we confirm pullback momentum with RSI?
I don't, but Mitch trades bounces as well, and so he might be able to follow up. Mitch trades the RSI a lot more than I do, and so it's all preference. I don't specifically, but Mitch might, and that's a question for him because I'm not much of an RSI trader.
Yeah, what I would say to that would be pullback momentum. Yes, you could tell with RSI, but the problem with RSI is always what I tell everybody is that if you use it as a leading indicator, that's not necessarily what it is. It's a lagging indicator. So a lot of the times, by the time it bounces off that VWAP, you're going to see it late on the RSI. Yes, you'll see it on the RSI, but use more RSI as what I would say more like confirmation once you're in the trade already, because it's going to lag. It's going to go and look like a good swing more in that green candle up than it will be in that red candle down. And so what you want to use is go ahead and trade that. But like you said, if it's just a confirmation that you're looking for, then you could use an RSI measure. But trying to use it as the leading indicator would not really work often.
Yeah, I mean, with Trade Ideas, I have a scanner that shows me the relative volume on Trade Ideas. But you might want to look into Thinkorswim for that. I would say, like, with AMD and MU, my I want at least, 4 or 5 million shares traded per day, at least. And so it really depends on the stock itself. Stocks have different floats, and so in turn they have different volumes that allow them to have good volatility, bad volatility, and so it really just depends on that. Like I said, my suggestion to anyone that's really trying to trade these strategies is to really learn stocks, right? Not like stocks in general, but learn individual stocks and how they move, and then you're going to become very comfortable trading this pattern and setup on different stocks. Like I said, I've become very comfortable with this on AMD, on MU, and it works really well. It depends on the market, right? The last key here is lately I've been using the market's volatility a ton, and with this strategy it's not an exception. I pairs off of the overall market. Like, basically, if AMD or MU is following the overall market, and for instance, like, the market breaks highs of the day and MU or AMD is pulling back to the VWAP, that can be an incredibly profitable strategy, right? So, like, say this is going on. Let me give you guys an example. Say this is going on right here. Like, this move, the stock is right here pulling back to the VWAP as the SPY is breaking highs of the day. That can be a very profitable move to just jump in this, and you can either trade this strategy. A lot of the time you'll see me scalping it, and so I won't go for the full, reward target way up there. I won't go for the full reward target. You'll see me scalping this move a lot, so I'll get like 10, 15 cents. And the great thing about it is that if I use this opening range high as my risk, then my risk is tiny. My risk is very, very small, and I'm able to scalp it and take 10 or 15 cents and still keep at least a 1-to-1 ratio on it. But that's kind of a different strategy. That's a scalping strategy, and the real way to trade this, and which is a very profitable way, is using that previous high of the day. And I think if you're going to consistently trade solely these type of strategies, I think you have to be very strict with your reward target. And just to give you guys an example here, like we can look at let me pull up something real quick, and then we'll go over a few on-demand examples. But just to show you guys, like if we look at this here, let me get out of this. Hold on. Alright, so just to show you guys, like if we could take a look at some stocks here, and you can kind of see what I mean. So we can take a look, and you can see stocks that consistently make these moves, right? And so let's go back some and look for some VWAP bounces, and you see a lot of them. And so, for instance, here's a good example, right? This is on MU, and you can see MU was in a choppy trend the first half of the day, or the first hour or so of the market day. Remember guys, when a stock chops over and under the VWAP like this, it's just in a choppy short-term trend. It's just in a neutral trend. It's not really picking a direction, obviously. It's sideways, right? But once the stock actually starts to maintain this trend here, once the stock actually starts to push and maintain this upward trend, look what happens. The stock follows the VWAP once it starts to pick up volume and maintain a good trend, and you can see how often and how much it respects the VWAP. So you can see it goes up, it goes down, bounces right off the VWAP, at least up to this previous high of the day right here. Comes back down again, bounces off the VWAP, and again, you can see it goes right back up to the previous high of the day again, comes back down, bounces off the VWAP again, goes right back up to the previous high of the day. And so this is a short-term trend that you can kind of treat like an ATM. You can just make money off of it over and over and over again, as long as the stock is maintaining a trend, right? As long as the trend isn't choppy, and as long as you're respecting your risk levels. You can't tell me this is random. You can see how well it respects the VWAP. It goes down to the VWAP and bounces off of it every single time after it starts to respect the trend. And so it can show you how profitable this strategy is, but you got to follow, your own rules with it, and obviously keep good risk management. But yeah, with that said, we're going to go ahead and go over some examples on demand with this strategy. So give me 1 second. I'm going to get everything loaded up here. Does anyone own a Hellcat in here? No. I've been trying to buy a Subaru WRX, but my wife doesn't let me. She tells me they're dangerous.
Got a question. Do we use hotkeys? Not very often. Maybe work them in a little bit more, but not very often. I do have them set for TradeNet. Back when I used to do a little bit more scalping, I used more hotkeys, but I got to the point where I felt I didn't need them anymore. Another question that we had is, do we ever reverse positions? I put in here, I'm gonna answer right now. I think at the end of the day, I don't like to do reverse of my trades just because I try to stick to a strategy. And I feel like when we do that reverse trading, you're essentially trading against your system. And I think this hurts my confidence in my system. And I think the first thing and foremost that works for traders is kind of trusting to one system and then just always trying to work that system. Sometimes the trade is going to go against you. Yes, some traders do go reverse and make money on the reversal side, but in my eyes, I feel like this kind of hurts the whole let's stick to one system look. So I personally don't try to do that in my trading. It just, in the long run, I felt that it hurts my confidence more in my system than it's going to give me the profit back in the loss. Another question here is, what's your favorite pattern to trade? Go ahead, John. You go first.
I don't know if I really have a favorite one. I was going to say, like, I trade different strategies depending on the market conditions. And so if the market's moving up, I'll long. Market's moving down, I'll short. If the market's moving sideways, a lot of the time I'll scalp sometimes. It just depends. So I wouldn't say I really have a favorite. I'd say it's more so dependent on what the market is actually doing. My favorite setups are probably there's two of them. There's a rebound bounce setup, which we'll go over in a minute, and then there's a fake out fade short position that we'll go over another day, I guess, and then we have a lot of videos on. But yeah, that's kind of how I tend to trade, and again, I think that's going to vary depending on the person. Let me see. Alright, this is wrong. Let me back out of here.
I would have to say for me, I would look for flags and pennants. Those have always done me the right way. If you haven't heard before, guys, I have this whole little 1, 2, 3 rule that I developed, and I have videos on our flags, strategies that you guys can see, just strictly based off the pattern itself. So I'll let John go ahead and take back over. But yeah, those are the ones I like the most. Flags, especially when you can combine them with the VWAP pattern like this.
Alright guys, so yeah, I'm just getting everything set up. I'm using Thinkorswim's on demand feature. It allows me to basically go back and essentially retrade any market day that I want. And so I'm just getting everything set up here. This should be fine. Just so you guys can see it all. Alright, so the first thing, I'm going to pause it right here actually. Let's make sure you guys can see it. I want you guys to see pre-market here too. There we go. Alright, so yeah, so I'm using Thinkorswim's on demand feature here. And again, when we're looking for a VWAP bounce, does anybody remember what the risk level we talked about was? Does anybody remember where the risk level we talked about was in these type of trades? And so when you're looking to trade these, that's the first thing you really want to document, is you want to understand, number one, where your entry is going to be, but number two, where you're ultimately going to get out if it goes against you, right? That's the first thing you need to understand, because if the stock starts to go against you without you understanding that level, it causes a state of panic. And you don't want that. You want to understand your levels very clearly, because that way, if it goes against you, you can get out and you're not panicking like, oh no, what do I do here, right? That should make a lot of sense if you trade. And so, again, with our risk level with the VWAP bounce, what we're doing is we're using that opening range high as our risk, right? So we can document that level here. We don't need to use the exact high. It's always going to be relative to where the VWAP is. And so if that level is over the VWAP, you can use like the body high right here. You can use the pre-market high, which kind of aligns with that same area, right? And so we document that level and we understand, okay, look, the stock goes under this level, we're getting out of the position, right? We got a really obvious level, and we can even make this big if you guys want to really clearly understand and see it. We can make this bigger here. So that's our risk level. Stock goes below that, we're getting out of this position. And it should be understandable why. And so once we finally get a move back down here, where's our reward target as well, guys? Where are we going to set our reward target? It's the opening range high is our risk. So we have this opening range here. Again, if the wicks are over the VWAP, I wouldn't suggest using that. I would suggest morphing it a little bit. And another really good thing here is when pre-market levels and that opening range high kind of correlate with each other. They kind of line up right by each other. That's another really good way to trade it. But once we get that move, again, our reward target could be at the previous high of the day up here at 43.65 or so. And so then once we get that, we're just looking for the pullback to the VWAP. And so now that we get this move down, I'm going to fast forward to keep this a little bit easier. We're going to look to enter this one right around 43.20. And if we get in there and our risk is about 43.10, our risk is only 10 cents, a very small and easy risk. If we get out around 43.60, then we have a 4-to-1 reward to risk ratio. Our risk, that's right. So we have a 4-to-1 reward to risk ratio. Our risk is 10 cents, and if we get in at 43.10 or 20 and ride it up to 43.60, then that is for a 40-cent reward target with a 10-cent risk, a 4-to-1 reward to risk ratio, which is a really good ratio. It's essentially what you want to look for. Is really solid ratios like that with a tight risk. Alright, so it looks like this is frozen. There we go. I might have missed it. Thinkorswim's lagging a little bit. Let's see if it goes lower. I can't remember. All right, there's 30. I think that's fine. I'm going to get in early. I can't remember if this one drops enough, and I guess you could use that opening range high as well. But I'm going to get in here just to show you the example. I'm going to jump in with 1,000 shares. The time to enter was probably right around there. And so, really, when you're entering these, sometimes you're going to miss them by waiting. And so you can get in anywhere between here because your reward to risk ratio is still going to be fine. I still think it probably drops there, but just in case, so I don't have to rewind it and waste more time, I'm just going to get in here and try to slowly scale out, if that makes sense. Okay, so yeah, it did drop down to the 20s. It's okay. We'll keep this entry. It's still a good reward to risk ratio, even with this entry. Yeah, actually, it went down perfectly to it. And so we'll add another. I don't necessarily recommend going in this with 2,000 shares, but this one actually went down perfectly. All right, so remember, our risk is down here for 10 cents. Our reward target is up here for 40 cents. And so our risk is 10. Our reward is 40. And that way, this should be a really nice trade. And so you can see how much it actually respects this as well. We could fast forward here. And you can look exactly, bounce exactly off of the VWAP, which happens very, very often. And so we can ride this one up. And as it gets closer and closer here, we're going to start, I don't think there's anything wrong with necessarily scaling out of it to protect yourself while you're in these type of trades. Let's see. We'll let it work a little bit. I mean, I'm not getting a new car, though. Buying a new car is a bad investment, I think. But, it just depends, I guess. It depends on what kind of car it is. Depends on how you pay for it. Alright. So, we're going to wait for this to move up a little bit more. I'm just going to fast forward. I might miss the exit, but for the example's sake, we're just going to keep moving here. Try to get out at 43.60. Maybe I missed it. That's alright. Well, no, we didn't. Alright. And so now that we're up here, it's not going to be the perfect exit, but we can get out half. One thing I really like to do is that once we get to your reward target, there's two options once you get to reward target. You can take half off, or you could take the entire thing off. If you're brand new and you've never traded before, there's nothing wrong with taking the entire position off and just keeping it a one and done trade. But if you're well versed in trading overall, you know you can scale out at these levels and try to, sometimes breakouts will happen at this previous high of the day. It's not always, and a lot of the time you're actually going to get a rejection here that brings the stock right back down to the VWAP. And so if you get too stubborn with it and refuse to take profits, a really good winning trade can turn into a losing trade or a break-even trade. And so, in this case, we could take half off and see if it works, but I'm going to keep it simple and just exit the full position. And again, you can see how well the stock respects this previous high of the day as well. Like, we could fast forward and see what the stock does after I exit, and you can see, look at how well the stock respects this previous high of the day. Like, look at that. It went exactly up to that level and then came right back down. And so, one of the keys to this is just not being stubborn with your profit taking. Like, if it gets to that previous high of the day, in my opinion, the worst thing you can do is wait for a breakout. I think that is a lower percentage play, and I think the smart move is to take advantage of this range right here. If you can take advantage of this range, it's a very profitable strategy. If you get stubborn and you wait for a breakout that might happen 1 in every 3 trades, then you're just being stubborn. So again, take the range. It's a range-bound strategy. You're getting in at the middle of the range, and you're selling off at the top of the range, right? You can look for a breakout. Again, it's a lower percentage play, but I guess it's all preference. Alright, guys. You can, Justin. It's all preference, man. I'm mostly a 1-minute time frame trader because I scalp, and it's just what I understand the best. But again, it's going to vary depending on your preferences, how you trade, how well you understand the different time frames as well. I'm mostly a 1-minute time frame type of person, but again, people are going to. It's going to be subjective. It's going to vary depending on the person. But yeah, does anybody have any questions? We're going to go over another example of a different variation of this strategy as well here. So we'll go over that in a second. We'll see if anybody has any questions before we go ahead and do that. Somebody's asking me how I'm trading right now. The way I'm trading is I am trading using Thinkorswim's on-demand feature. It's a really good tool that essentially lets you go back in time and retrade any market day. So like I can go back to 2 years ago and trade, October 30 or October 1st, 2 years ago. I can go back and retrade any market day. And so with that, you can practice on the weekends using this on-demand feature. So I'm going back to, this date was on April 22nd. But, I can go back to any day I want, essentially, and retrade any market day. Really good tool, really great way to practice after the market closes or on weekends like right now. Does this strategy work with OTC stocks? Probably not. It might. It doesn't. So listen, if you're getting like a parabolic mover, a lot of the time pullbacks to the VWAP can be very profitable. I've never tested it or traded it on those type of strategies though. And so is it going to work? I really don't know. I'm really not used to trading it, trading OTC stocks with it, and so I can't say for sure.
Yeah, what I would say is always just look for it. Check the patterns in different markets. I've actually seen this one work in China market. I was just like paper trading it, just watching out at the open. And really what it's all about is, you guys got to remember what VWAP really is, guys. It's a volume weighted average. It's using a combination of the moving averages with the volume that's being created to let you know where the bulls and bears are. It's not an extreme 100% definition, but it at least gives us a price range to understand where the majority of volume is getting in the stock. And that's so important to any stock. And I think that's really what this trade works out, is because you're getting in a point where not the greedy people got in, where the smart traders got in right before the breakout, and it pulled back to their spot, their average.
Right.
It stops out all the greedy people that buy the high of the day, and they wash out, and then all you're doing is getting that re-momentum right back up to the high of the day.
Right. Yeah, and it's one of the reasons why, like I said, you can't be stubborn and refuse to take profits at the high of the day. That's your reward target, in my opinion. That's the area where, honestly, a lot of the time I'm selling just a little bit before that, because again, if you've traded long enough and watched these type of moves for long enough, stocks are going to reject at that high of the day a huge percentage of the time. And so with that, you got to be careful. You got to take profits and protect yourself when you can in those trades. And regardless of whether you want to keep it a one and done trade or, just scale out of it, let it test, that's up to you. That's all personal preference. But again, I think you should at the very least, take some profits at the previous high of the day to protect yourself. What's up, team? Do I ever swing trade? Not too often.
I know you got a question. I answered it, but that was about that you were using market orders on demand. But I always recommend using the limit orders unless we're on our platform that we use every day. But
Todd, is that you, bro? What's up, traveling? I'm assuming that's Todd because I know Todd travels. It's got to be Todd.
Yeah, he changed it up. He had set it up.
Yeah, I can tell just by the name. It's probably Todd.
Will there be the risk level suppose entering at the second bounce?
VWAP is its own moving average with volume taken into consideration, George. That's basically what it is. It takes the average price with volume. And so that's what the VWAP is. It's just a volume-weighted moving average, basically. Really what it is, though, it's an intraday trend indicator. So it tells you the intraday trend of a stock on a short-term intraday basis, not long-term. You use it for short-term trend confirmation and short-term trend analyzation is what you use the VWAP for. What is a hard stop used for? It depends. If you don't have the most discipline, a hard stop is necessary. But if you have enough discipline, I prefer mental stops. But again, I don't know if I'd really suggest that for a new trader. You know what I mean? I would instead prefer to probably, learn how to use hard stops and respect them. Because again, a lot of new traders just don't have that discipline to actually exit and follow their mental stop loss. And even I run into issues with that. And so it's all preference, I think. Oh. Yeah, I would never trade OTC. Yeah, me neither. And look, again, you can look at the stock. I've kind of let it roll. You can see how well that high of the day rejects a stock a lot of the time, and it's major resistance a solid amount of the time. So we're going to go over another different variation of this same strategy. It's another VWAP bounce variation, but in my opinion, if you want a little bit more accurate version of this, obviously it occurs less often in the market, but in my opinion, it's a little bit more accurate than this. And so, let me see here. Let me put this up. All right, so this one's going to be on April 20th, and it's going to be AMD. All right, so again, same concept here, right? You're looking for stocks to bounce off the VWAP. Same concept, right? But if you want a little bit better entry, if you want an entry that's going to be a little bit better of a high percentage, a little bit more of a high percentage play, this is what I suggest. And this is the reason I came up with this specific strategy, is because I realized I was getting faked out at time, right? And I call it the rebound bounce. And so the first key to this one is that you're looking for the stock to pull back to the VWAP, but then it kind of fakes you out a little bit. It kind of pulls back underneath the VWAP here. And the key to this is that it actually forms a really obvious and clear low. So like, again, the key here is that it forms this low right here, right? So it forms this low at 56.85. This is actually better when that opening range is not going to be favorable for a risk level, right? So it forms this low down here, and this is going to be your risk level in this trade. And what you're essentially looking for in this type of instance is you're looking for the stock to go above the VWAP and now pull back to it. So you want the stock to look like it's going to fake out and come back down and rip below it, but then get a quick reversal back above it. And then that's when you're ultimately going to look to enter this type of position, right? And so that is what you're looking for with these type of trades. It works out really, really well. Sorry. It works out really, really well. And let me show you guys an example of this. Let me see. I don't use VWAP. Yeah, it's okay. You know, everybody's a little bit different. So again, we get this big low that's formed here, and this is going to be our risk level in the trade. And once we get a move above this, then the next step is we're going to look for a pullback to the VWAP. Right, so we're going to fast forward a little bit here. I just want to show you guys kind of the consolidation that we're going to get. We're going to look for a quick reversal above the VWAP, and after we get that, at this point, when you see a stock like this, it has a confirmed move below this. We have some confirmation earlier, like if we extend this to the left here, you can see it actually kind of confirms this level here as well, right? We can see it's kind of the high. I can activate it and show you guys a little bit better. You can see we have some confirmation here and here. And so you can see that level here right around 46.85 is a pretty respected level in this stock. And so once we get this move above here, the next step is we're going to wait for a stock to pull back down to the VWAP. You know, it might not pull back fully here, and you can use this level as your entry or anything else to confirm it, but we're basically looking for the stock to squeeze a little bit below the VWAP and then rebound completely, come back above the VWAP, and then we're going to enter around a dip. Because when a stock starts to look like it's going to change trends and then immediately gets bounced all the way back above the VWAP, that looks really strong. A lot of other people are going to start attacking that stock there as well. And so if you wait for a pullback after the bounce all the way back above the VWAP and start to go long on that stock, anticipating that it's going to continue its upward trend, again, it could be a really profitable strategy that you could take advantage of if that makes sense. So again, we got this bounce up here, and we're just going to wait for it to pull back to the VWAP, get in a little dip here, and let me fast forward it once. All right, so we start to get the little rejection here. Trying to make sure I don't miss the entry, but we're getting a dip here, and so we're going to look to get in anywhere around here. So once we get this big squeeze back above the VWAP and a pullback, we're going to look to enter on that pullback for a nice quick trade. Let's see if we catch it. And well, thank you, William. I appreciate that, bro. Margin requirements are 2K. I think you have to have like 2,000. All right, so we got some consolidation. Ultimately, we're looking for a move a little bit closer to the VWAP. I'm going to fast forward one more minute here. All right, so this is the move we wanted to happen. I'm going to pause it and let the charting catch back up. So we're going to get in right around here, right around 14. We finally got the dip to the VWAP. You can see where I entered here. And so once we get this type of move, right, we get the obvious low formed that we can use as a risk level. We get a big bounce all the way back above the VWAP, confirming that upward trend, and then we get a pullback that we can enter on right around here. That's where we're going to look to go long on this type of move, and we're going to treat it the same way. We're going to treat it just like the previous VWAP bounce. We got a really tight risk level. If we get in here at 57.14 was our entry. If we use this risk level here, our risk is about 30 cents, but we have a huge reward target. So we have a 30-cent risk, and then we have a reward target way up here, at least to 70, right? So, a big reward target. That is a 2-to-1 reward to risk trade. Our risk is 30 cents, our reward is 60 cents, and we just have a really good reward to risk ratio here, 2-to-1. And again, when you're trading these, this is going to be a little bit higher of an accuracy setup. It's going to have a little bit better organic accuracy than the conventional VWAP bounce, in my opinion, and it's one that I've traded a huge amount. I also use it to scout positions as a good entry indicator for my scalps as well, and again, it works super well if you just wait for these type of positions. Again, the key here with this is you're looking for the stock to actually kind of push a little bit below the VWAP, form a confirmed low that has some confirmation before that you can use as a risk level, and then pull back to the VWAP like you can see here and just bounce off of this level. And if you wait to enter on positions like this, again, they're going to be really high percentage plays. I trade this pattern a ton. It's probably my favorite long setup. Somebody asked me what my favorite strategy was. This is definitely my favorite long strategy. Works really, really well. Very high percentage strategy. And if you guys watch the stream, I use this one a ton in the market. I use it a ton on our live streams because it works really well. Alright, so we can fast forward this here. And you can just see how well this works. I'm just going to keep fast forwarding. And look at where it goes. So I actually kind of missed my area here. But look at where it pivots to the first time. Right, where does it pivot? It pivots right around that previous high of the day, guys. Not perfect, obviously, but that's pretty close, right? It's one of the reasons I always scale out a little bit early. But look how much that previous high of the day, look how well it respects that previous high of the day, which again goes back to my earlier suggestion, which is to take profits before it hits that previous high of the day. You want to try to keep that as your reward target, but you do want to take profits there or a little bit before so you can protect yourself in that trade. Once you take profits, if you're not keeping it a one and done, once you take profits, you're ultimately protected in that trade. And that's what you want to do, right? But you can see how well, you can see how well it respects that level, right? So if we want to take some profits here, and so we've banked $400, we still have $205 up left in it, and then try to ride it for the breakout of this level. That happens a lot as well. It does break out sometimes, but if you're going to ride it up for that breakout, again, what do you want to do? You want to take profits before the breakout. Because while it might break out there sometimes, other times it's not going to, and it's going to completely reject that level. And again, here's an example of when it actually broke out. And you can take the rest into strength. You always want to sell into strength. You don't want to sell into weakness, obviously. And so key thing when you're taking profits and trading is sell into strength. It makes it a very profitable way to trade. Yeah, go ahead and share it, William. Go ahead. I don't trade moving averages. Clash. All right, any questions on this one? I got one more strategy that we're going to go over today. So how do you do the oversell technique? I don't know what you're talking about, man.
Probably oversold technique.
Oh.
Probably reversals.
Yeah, it's not my. That's not my style, man. Everybody has a little bit different of a niche in trading. Mine is VWAP, scalp sometimes. Like I've been scalping a lot lately. Is the VWAP more accurate with pre-market on or off? I mean, I use the pre-market on. I use pre-market data on, and you can see how well.
It's gonna recalculate anyways at the open, so it doesn't really matter if you keep it off the pre-market or on it. We use it, but we don't trade off of that pre-market. That's for sure.
Yeah, for sure. I mean, I don't trade off the pre-market VWAP. I trade off of pre-market levels, but not the pre-market VWAP. I think I have the deviation -2.2 for the VWAP on Thinkorswim. That's the deviation I use. But yeah, it's all subjective, man. Everybody's a little bit different. Clash. I day trade, I scalp sometimes as well. It just depends on the market conditions, like always. All right, so the next strategy we're going to go over here, and I'm going to put the PowerPoint back up and pause this. And then we got one more to go over, one more on-demand strategy to go over. So let me get this rolling here again. Alright, so...
Alright, guys. While John sets up that, we got almost 77 people watching now, almost 80 people. Let's go ahead and hit the like, guys. Hit the subscribe.
Yep. Yeah, guys. Remember, we do this live. We're going to be day trading these strategies live every day. So if you haven't before, we day trade we day trade live on stream every weekday morning right here on YouTube. So hit that subscribe button if you haven't already. You can watch us trade live for free. Again, we're not experts here. I'm just teaching you guys my system for trading these strategies, like what I specifically look for, my keys, and how I trade them. And again, I'm not an expert. You know, maybe they work for you, maybe they don't. And so always do your own research and analyzation here. And understand that, you know, everybody's going to be a little bit different. People have different personalities, and so they're going to have more patience or less patience with different strategies. Anyways, so the next one I'm going to go over is just how I trade the washout long red to green move. And this has been one that I've actually been scouting a lot lately as well. Really profitable strategy if you trade it correctly. And I've actually back tested, you know, this one a decent amount, and it had a solid accuracy rate as well. So with that said, let me see. Yeah, it'll be uploaded. It'll be uploaded, bro. You'll be able to watch it after it's done. So yeah, so basically with the red to green move, washout long, whatever you want to call it, there's a few different ways. Like, people trade this strategy, you know, and they trade it and they don't understand why it doesn't work, and they don't understand why they're having trouble with it. And, you know, there's a few different little nuances that you can add to red to green moves to make them a little bit more profitable. And I think there's two different types of red to green moves. There's the previous closing price breakout, or there's the intraday high breakout. Right, I'm going to go over the intraday high strategy. I'm not using the previous closing price in this instance. Instead, I'm using a previous high of the day. And so what I'm looking for with this type of strategy is I'm looking for some reddish, bearish action at the open. So as you guys can see, let me get my little... Hey, where'd it go? Oh, there it is. I'm going to get my little... So again, we're looking for some downward action at the open. We're looking for a downward move at the open. And then once we get that, we're looking for a quick squeeze back up. And then we're looking for a break of the previous high and pre-market high. Like, that's all we're doing. And so, again, just like the VWAP strategy we just went over, what we're looking for here, what we want to see first thing is we want to see the downward move. But then we want to see another cross over the VWAP. This may seem insignificant, but the reason it's valuable is because it is confirming a trend change. It's confirming that trend change between a downward moving trend and an upward moving trend. And so this cross over the VWAP is key, and it also is telling you that the VWAP is not super high in the range, right? Like, you're not going to run into the stock and get rejected at the VWAP because you're breaking over it. It's in the right range for this type of trade, right? Because if the VWAP's too high, it might get rejected there. If the VWAP's too low, it might be extended, right? And so one of the keys to this is, again, looking for the stock to actually cross over that VWAP. That's a super important part of this strategy. And so I do want to kind of ingrain that so you can kind of understand it and you know, make sure you guys remember that. The next thing here is you want to look for pre-market levels as well. This isn't just trading a breakout of the move. You know, you can see the previous high of the day here. But you're actually looking for a breakout of the pre-market high. So you can see the pre-market high and that previous high of the day lined up to right around the same level. And you know, something that we always talk about and something we've been talking about for years now in all of our videos is that the more setups and strategies that are kind of going on simultaneously on a chart, the more momentum in that direction the stock's going to have, right? So if a pre-market break happens at the same time as a previous high of the day break happens, just like here, you can see the pre-market level, you can see the previous high of the day. When that break happens, stock's just going to have more momentum. You know, you're going to have a better percentage move there. You're going to have an easier trade, and it's going to work a larger percentage of the time. And so with that, that's key here. So this strategy is specifically looking for the previous high of the day, which you can see the top of this wick here, and the pre-market high to line up right around the same area. And then you're going to look for a cross over the VWAP, and then you're going to look for a breakout over that level. Okay, so you get the cross over the VWAP, and then you get a breakout of not only the previous high of the day, but the pre-market high as well. And again, when both of those go on simultaneously, it's just going to give you more momentum. And so you're entering here on this breakout. If you want to give yourself a risk level, a lot of the time I'm just using a 1-to-1 reward to risk ratio. But if you want to give yourself a risk level, you can use this level here. You know, it's a low right down, kind of like a VWAP bounce risk level. You can use a low right there. You can keep it pretty tight, and you can give yourself a solid reward target. But again, that's going to be subjective because the way I trade it is usually just a 1-to-1 trade. But again, you're entering on this breakout. It's not like a regular high of the day breakout because this one's breaking multiple different levels. And again, you know, you're just selling into strength. You want to sell into strength. You don't want to wait for pullbacks. You want to sell. I got this arrow a little bit wrong. You want to sell right into this strength. And again, I treat it like a scalp. And so it's not a full range move like a VWAP fade. I would never recommend trading the high of the day in that last type of strategy because in that last type of strategy, just to go back and show you guys, there's a huge difference. Because at this point, when the stock finally reaches this level here, it's way too extended. You know, so I don't trust that high of the day break. But you can look at how tight, how much more tight the range is in this type of trade, right? It's not a huge distance above the VWAP. The cross over the VWAP ensures that it's not too high in the range to where it's not super extended when the break happens. And that's really the key here, and that's what people don't understand is that you can trade high of the day breakouts. And they work some percentage of the time. But the way you really trade them is you look for levels that are not super extended. You know, again, just to show you again, we can go back to this one. You can see how extended this move is. You can look at the distance between the VWAP and this move here. You know, I don't want to trade this move. I don't want to trade the breakout of this level. Because again, it's going to be super extended and get rejected like it does. You know, there's just too much. It's at the top of the range here. It's at the top of the range. That's not what I want. Right? What I do want is I want a really tight range breakout. That's what I'm looking for with the washout long, like I talked about here, is it's a tighter range breakout. You know, you can see how much smaller this range is, and it also has the pre-market level to confirm it. And so when we get a breakout there, you're going to have a lot more confirmation and a lot more momentum to go in your direction. And so does everybody understand that and understand kind of what I'm talking about with this strategy and why it works? Because again, it's not like the previous one where you're going in long at that high of the day because it's too extended with a VWAP bounce. It's at the top of the range. You want to look for a tight range to break here. And you want to have really obvious levels to confirm that, if that makes sense. What's up, team? Alright, catch back up in the chat. What is an expert? Do they ever exist in trading? Probably not. I don't know. I just if I don't say that, people are gonna yell at me and say you're not an expert. You shouldn't be teaching people. You know, whatever. Like I said, we day trade live every day. You can see if we're good or not.
Yeah, like I put in the chat, at the end of the day, we all learn from experience. This is why you know, we show what we do, and we show everything for free. Just because in the end, that's what we want you to do, guys, is to learn from experience. You know, we're not here to say that we know one way better than the other. We're more along just showing you the process that every trader should be going through and building their own system. And this is what it should kind of have. You know, you should have that complete trading plan. You should know when you're getting in, when you're going to get out, what you're selling into. So when you know all these variables, you start building that complete trading plan. And that's really what trading's all about, guys. It's not about being an expert. I would say expert's more of a performance measure than a status. You know, there's no really status in trading. It's more along how are you performing and how are you executing your strategy.
Right, for sure. Yeah, and I think it's all subjective on whether you would classify yourself as an expert. I think the day trading market has gotten really saturated with educators, right? Like, we've been around for years, but especially in the last 6 months, like the day trading world has gotten really saturated with like experts. Everybody's an expert. Everybody's trying to sell their course and their service, and that's why, like, Mitch and I just give everything away for free, because I'm not trying to compete with all the gurus over there, man. I'm just trying to teach people what works for me, and if it doesn't work, that's cool, I day trade live every day. It is what it is, but yeah, again, I just think the day trading culture is filled and saturated with experts nowadays. Everybody that claims to be experts, and I think people see it. People that aren't even passionate about it see it as a money-making opportunity, right? Like, I'm just passionate about it. I love trading. I've been doing it for years, and we've been giving everything away for free for years, and I think that I think new traders are very confused when they first get started, because they have all these experts trying to tell them all these different things that a lot of the time they're just trying to sell them stuff, Alright, so everybody understand the strategy. I'm going to go over the on-demand example. Alright, cool. Alright, so we can go over the on-demand example real quick. Alright, so if anybody wants to know what example we're actually going over here, let me fix this. There we go. If anybody wants to know what example we're going to be going over here, we're going to be going over this past, on the 29th, April 29th. What day is that? That was Wednesday. This past Wednesday on MU. Alright, and again, just like the last one, guys, you're going to see some very common themes here. Let me go back a little bit. You're going to see some very common things here that we talk about, okay? The first one is that, number one, when we start off this type of trade, again, we're looking for that previous high of the day, as well as the pre-market high to converge right around the same level. And then we're going to look for the breakout of that. That's all we're doing. We're looking for the previous high of the day and the pre-market level, which is, again, right here, to converge right around the same level. That gives us a really nice confirmed level that we can essentially wait for the breakout to happen. And again, we're just going to sell into strength. We're not going to be marrying these type of moves. We're going to take profits very, very quickly with these. And again, I'm usually giving myself a 1-to-1 reward to risk ratio with these, and I'm keeping it really easy and simple. Let me see if this is loaded yet. Nope, still waiting for my Thinkorswim to load. Yeah, 100% traveling trader. Appreciate it, Todd. Yeah, man. Like I said, I've become fans of other people, and then I've lost other people as fans as time goes on. I think it just depends, right? As you mature as a trader, you start to see things that some people, you know what I mean? Like, it depends. Like, and I'm not here to hate on anybody. Like, listen, like, there's some channels that I started off with that taught me a lot. One of them, as much hate as they get, was Investors Underground. Investors Underground has got some legit content. I really like them. Whether I don't even know if they even know about me, but whether they like or dislike me, doesn't matter. I like Investors Underground. They've had some good content. They've been putting on good content for years. Others is, Sean Deckmar was pretty solid too. He's got some good info. And like I said, some of these guys might talk smack about me because the trading world is super competitive. I really don't know. I haven't honestly looked at their stuff in a long time. But when I first got started out, I actually liked their content. I remember liking their content. Other ones are a little bit more sleazy with it. But, it is what it is. You kind of grow as a trader, and you have different styles and preferences that go on. But anyways, guys, like I said, here's the key here, right? You document this level, the pre-market high and the opening range high, and that's all at the same level. What do we get, guys, on this move up? We get a cross.
Can I have some paper?
Yeah, bud. We get a cross over the VWAP. Here you go, buddy. There you go. Love you. But yeah, we get a cross over the VWAP. We get pre-market level and the high of the day to confirm right at the exact spot we're looking for. And then again, guys, it's a very easy trade. Like, all we're trying to do, we're waiting for this break. Once the break happens, we're jumping in. If you ever watch me trade this strategy, I trade it a very specific way, right? I jump in. As soon as I'm up any solid significant amount, I'm getting out. I'm getting out of a decent chunk of my profits at least. So like, you'll see a big rip up. This is probably exactly how I trade it. All right, we get a big rip up. I'm taking half off there, you know. I'm going to let the other 300 work. You know, that way I'm protected. So that's how I trade it. As soon as we get a big breakout, I'm taking half off. As soon as I'm up at all in the trade, any significant amount that I'm going to actually have a net profit from that's worth it, I take a huge chunk of it off. But again, if we let it keep going here, you can see once this move happens, a lot of the time the stock's just going to continue maintaining these really nice trends for us. So like, a lot of the time this is signifying the first trend change, and when the stock actually pulls back to the VWAP, it's going to bounce off of the VWAP and respect that upward trend that it has now been in, right? But I'm just going to keep it easy and sell off there. But again, the key here is you're looking for the crossover the VWAP. That ensures that we're not in a super extended range. We're not buying highs of the day when the stock is super extended on the upside. And instead, we're getting in a tighter range, and we're looking for more than one confirmed level to break here. We have the previous high, and then we have the pre-market high. And when that happens, it can just be a really powerful strategy as well. We're just going to get out the rest there and have a really nice few $100 from 1,000 shares. But that's it. I hope you guys understand it. I think Mitch has some stuff he wants to go over.
Yeah, guys, before we get into that, I just really wanted to put up at the end of the day, guys, what we always try to do really, guys, is just break down the truths of trading, get you guys to understand that system building is really what's going to get you to those constant profits that everyone's looking for. And at the end of the day, what we try to do is just at least provide a learning curve towards the get rich scheme. You know, this isn't a get rich scheme. We try our best to teach you guys system trading and try to show you that every single day, that we approach it in that manner, and that one of the biggest things for us has always been risk management. And once we've established risk management in our trading, then we can really start seeing consistent results and a consistent approach kind of actually be executed. And this is really the key to trading. I think this is a lot of what isn't taught in the trading kind of world, is that at the end of the day, guys, this isn't that get rich quick. You have to develop a system to match your personality so that you can really get to those profits. A lot of traders are going to go through struggles of not only just finding the strategy that matches their personality, but also executing it. So don't think this is a one day I'm going to get perfect kind of thing. This is something that you have to work at, something that could take years, but it's definitely in the long run, if you do stick to your systems and continue to build on those skills, you can see the profitability that you see John and I make, you know, in these live streams. And that's really what matters, is the consistency has to come from the system. It doesn't just come from that John's just that much better trader than anybody else, or that you can find another trader that's just better than the other. It always goes down to the system, guys.
Yeah, for sure. It's all about your system, right? You got to make sure it's a profitable system, and you got to make sure you're not staying stubborn with an unprofitable system, right? A lot of times traders get stubborn with systems that just don't work, and you got to be objective about it and just stick with what does work. And if you can find one that works, you know, you got an ATM machine. But, you know, it's all about being objective and, you know, looking at it how you should. But it's all about the system, man. That's exactly right.
All right, guys, I'm going to go into a real basic understanding here of kind of sector analysis. One of the main things I just want to teach you guys is how to really find the hot stocks of the day, and how I try to break down the market as the market opens. One of the major things that I see traders kind of get lost in is that they don't understand that the market overall has kind of movement that is correlated. And if we don't understand this correlation, a lot of the times we can catch ourselves kind of shorting stocks when that whole sector is going up. That can be a real kind of detriment to our kind of accounts. A lot of the times, well, we don't want to be always just going with the herd, but we also don't want to fight the herd. There's this mentality that, if you're stuck on one side and you just keep shorting a stock that keeps breaking out, well, hey, I mean, that's your fault for not being on the right side. The majority of the traders are pushing it up and you're there trying to fight it. So what I basically try to do is open the day and really start going through kind of the sectors first. You want to take a look more at what I call macro view of the economy first. In the US, we typically get kind of political, economic numbers coming out, regulatory, it could be the Fed's monetary policy, fiscal policy, and a lot of these things have to do with the market overall. And so what we try to do is I try to start looking at sectors that are highly correlated and kind of go with the investors' look. This week, we had a look where they were going into consumer cyclicals. People thought that the cyclicals were really starting to rip, and these were the stocks that were coming back. We could take a look in the cyclicals. Cyclicals is something like, let's say, restaurants. Restaurants you saw breaking out. You saw also resorts and casinos really getting a lift. And as that lift was happening, investors were talking about going from growth to cyclicals. And so this is something that you can look out for. So one of the key things to look for is which sectors are extended, which ones are breaking out or breaking down. This is very important to understand. You start by finding the industries that are hot in those sectors. So like once you get into, let's say, consumer cyclicals, you would look here and say, okay, so what's actually moving? What's the fastest moving up? Okay, so media is moving up against the index. And then you could also look at what's getting hit the most. So casinos are getting hit the most. Okay, I can take a look at that and see how bad are they getting hit, where are they finding the resistances, and what are the stocks. Once we find the industry, now we want to find the leaders and kind of the laggers. Leaders will usually be the highest percentage move or where the most volatility is. Let's say with Penn, you got that big volatility at the open. It just went straight down, really giving you that look immediately at the open. But if we look at something a little bit slower that didn't end up down as much, you could look at LVS that kind of dropped and came back, or a little bit slower stock like CZR that only dropped 20 cents. And what I try to do is I really try to find the leaders and the laggers. There's usually a stock that's leading the industry or the industry index, and then there's usually a lagger. You can go ahead and base these trades off of that and kind of do kind of pairs relationship. This takes a lot of experience. This is not something that you just get used to one day to another. But really what I try to do is I'm trying to do more of an analysis here than a trading strategy. There's too many traders that are pushing at the open, trying to just trade. And what I try to do is just watch the momentum, find the momentum, what's changing. I actually use this side over here, which is net change since open daily. This is important. I like to see the relationship between what the change was in the morning. Let's say in the morning, consumer defensives is the least down, the most up for the day. Energy is the biggest down for the day. At the open, I want to see how that relationship changes. Do we go positive? Do we go negative from that number? And I think that's a very important thing to watch to see if you get, let's say, the index was very negative in pre-market, but as the market opens, it goes to big green. So this is important to watch, and you'll be able to catch industries breaking out. A lot of times I catch industries breaking out or breaking down. What I want to see is once they're breaking out, what's really important is to kind of have an understanding of where the catalysts are. So in the morning, this is when I go through the big stocks. I'm looking for big catalysts. What could be moving? What are investors watching? Are they watching kind of auto parts, specialty retailers? We could look at Office Depot and stuff like that, and look at the industry itself, see what's moving the biggest, where the traders are. Because at the end of the day, where the momentum is where I want to trade. So I try to use this analysis, not necessarily to tell me if I'm trading up or down, but find where the most traders are, where the hottest stocks are, where the weakest sectors are, and where I can go ahead and start looking to find my strategies. All right, guys, this will be pretty much it. If you guys have any other questions in the chat, definitely go ahead and ask them about either about this or something that John asked. You can ask any question. We'll leave it open for a little while for some questions. Just wanted to really quickly touch on how kind of I go through it. So if you guys are watching us on our daily stream and you guys hear me say, well, healthcare is leading us down today, and at the open, we went and we headed down about 53 points or 53%. And that's important because the change to the open as it was in the pre-market is a big change. It's a big relationship to kind of keep an eye out for.
Yeah, for sure, guys. Yeah, if you guys have any questions, we can, finish it for the day. Go back to the rest of your Sunday, guys, and have a good weekend. We'll see you guys Monday. So Kay, it's gonna be, it's all gonna be recorded and everything. It's all gonna be there already for you. So you'll be able to replay it basically. Somebody's asking about TradeNet. So TradeNet, listen, guys. TradeNet, it has its pros and cons. Let me say that. So TradeNet, it has its pros and cons. There's some benefits of using them. There's some flaws of using them. One of them is, like, if you're a penny stock trader, there's not going to be many penny stocks to trade on there. If you want to get started for cheap, and I think TradeNet packages come with the base package is $3.99. It comes with like a course, a demo account, access to their chat room, and then once you're approved for the funded account, you become a contractor for them, and it's like a prop firm. So there's a 70-30 split, a max loss of 700. But the base package for $3.99, you get 14,000 to trade with. There's no PDT rule, and you can short, and then you can just withdraw once per month if you make any profits. But again, there's a 70-30 split, so like if you make $1,000 net, they're going to take 30% of that, which is 300. You're going to keep the other 700, if that makes sense. And if y'all want to check it out, I'll post this link and you can use it. Hey, Isaac, don't hate, bro. Don't hate. You guys know if your team did the same thing, y'all be mad too, or you'd be supporting them anyway. Later, JJ. Hey, brother, I appreciate the support, man.
Yeah, guys. Just for Robinhood, I put up the biotech sec, and this is what I see. I see double tops, triple tops on the dailies, and so that just shows that, hey, it's going to be harder to go up than it will be to go down. I think that's an important thing to always know. How easy is it to bring the stock through the sector, through the momentum up, than it is to bring the stocks down? Biotechs have been making a move up, a big move up since March, but when will this return? And I think this is important to watch. You can always watch this with the overall market, because at the end of the day, the overall market leads most of these. The SPY, you could watch the QQQs, and really this is what I try to do. I try to understand, hey, relationships first, and then I look for my strategies to really nail if I got at least the trend. Because if I have the trend right, usually, even if I miss on one trade, it doesn't necessarily mean that the pattern won't show up again and that I can get the positive kind of reward that I'm looking for. So if I can get the trend right, a lot of the times I'm going to get the profits out the stock.
Yeah, guys, there's also Trade Ideas test drive is coming up in like a week, and so if you've ever wanted to try out Trade Ideas, honestly it's a great thing. You can basically try out Trade Ideas. I think it's a 2-week test drive. Let me see if I'm right. Yeah, so it's a 2-week test drive. It starts May 11th. I think it's like $8.99. You pay $9, you get Trade Ideas for 2 weeks, which is basically half a month, right? To put it into perspective, for my Trade Ideas subscription, I pay $120 a month for Trade Ideas. Or it's like $118 a month, and so half of that would be like $60 basically, right? You could try it out for $9 for that entire 2 weeks, and so it's a huge discount. And if you've ever thought about trying out Trade Ideas, you can check out the link and try it out for cheap. I'll post this link here as well. Okay, but yeah, guys, have a good day, and yeah, we'll see you guys a little bit later. Have a good weekend,
yeah,
team.
guys. We'll see you guys tomorrow.
Later, guys. Good luck, team. And we'll see you guys tomorrow.